This is the exact reason why you keep on losing in a downtrend market. Yes, you might know the direction of the market want to sell. Yes, you are correct on the direction, but before the market moves to the downside, it first smash or stop loss first before moving. In this video, I'll be showing you guys what you are actually doing wrong and how to fix your problem. Now, what is the bearish market? The bearish market is a market that is selling to the downside. It is going to the downside. A market that is declining. That's what the bearish market means. Bearish, bear down. If you want to attack someone, it puts you down first before tearing apart. That is what the bearish market does. It's the downward market. That's why it's called a bear. We can also call it the hawkish market, but the most popular term is what we call the bearish market. Now, it's a market that is going to the downside, and the key factors here are what? The lower high, which is at this zone, lower high, and the lower low. This is now lower high. These are the key factors of a bearish market. A bearish market is the formation of lower highs and lower lows. Why is it called the lower high? Because this high, this lower high is higher than this one. This one is lower than this one. Why this lower low is the new one is lower than the previous one. That's why it's called a lower low. Now, the law of the bearish market states that the market will keep on breaking the lower low, but must never ever tamper or trade above the lower high. I repeat, the law of the bearish market states that the market must keep on breaking the lower low, but must never tamper with the lower high. Now, what you guys are doing wrong is you don't know the right places that the lower high and lower low is. The law, we have already stated the law already, but most people, 98% of traders don't know where to place the lower highs and lower low. That is what we're going to be doing in this video, so that you will not be used as liquidity again in the market. So most traders will just come, when they see markets reacting to the downside, they will pick the trend line, they will draw a line like this, this kind of imaginary line. Then what are they expecting? Expect that when the market come back and hit this particular zone, it will start coming down. I'm sorry, sometimes markets will come, scatter that place that your presumed or you anticipated lower high, trade above it, then immediately trade above it, then you now think that's a change of character, then you now enter to the buy side, then you are trapped. The market will now move to the downside. That is how the market works. The market is very manipulative. Now let's all see how the market actually works. What is the correct bearish trend, and how to place the lower highs and lower lows at the right places. Now, this is the correct bearish market trend. This is what it looks like, but this is just a drawing. We get to the chart on the next slide, but this is how it looks like. This is how the market actually moves. Now we have what we call inducement. So inducement simply means a place in price that tricks traders, that tends to make traders enter the trade early. Yes, they are right. That is why you keep on hitting stop losses, because you enter the inducement zone. So if you form this fake resistance zone, with this fake lower high, then we trade lower, then you not think the market is going, you not start chasing the move. Then if you come back, trade above that inducement zone, you not think the market has changed character, then you not enter for the buy, then you are trapped. The market now move to the downside. I can see it very clearly here. Then the same thing here, trades above, started going up again, started coming down. When the market is coming down like that, the question you ask yourself is, where is the inducement zone? Where is the inducement zone? If you can't see the liquidity, then you are the liquidity. Then the market moves down as if it's going down. So most traders are not just jumping into trades, placing sell orders because they think the market want to leave them. They'll place trade out of FOMO. The market now trade starts going up again, break by the inducement zone. Then start going, and the market has changed direction. Now start entering for buy again. then smart money will now come and use all these buy orders and sell to those buy orders. See, move straight down. After the break of structure occurs when the market has broken the previous lower high and lower low. You can see in this place, after market broke past this lower low, we have what's called the break of structure. The new lower low was formed. This one broke past this old lower low. The new lower low is formed. That's what we call break of structure. Break of structure simply means the continuation of that trend. Now let's head over to the chart and see whether it is true or not. Now this is a real life chart. Let's look at the chart. You can see we have the higher low here. Let us start from this particular place. Have the higher low here. Have the lower high. The lower low. Have the lower high. Market trace down. Break the break of structure. Then the new lower low was formed. Market retraced. You can see retraced. Particular zone at this high here. And then coming down for this place. Then the market went passed through these two highs. Then came down again. Have what they call the break of structure. Then the new low was created. So now the market has retraced back again. Took out inducement zone. These are inducement zones. So we're waiting for the market now to expand or drop down for this lower low. This is the GPUSD on the weekly time frame. This will be a long time. Let's give you guys an example of what the chart looks like. I can see in the drawing and the chart, the drawing was very clean, but the chart is not very clean. So that is why you need to know where to place the lower highs and lower lows. As you can see, all the lower highs are being maintained here. All the lower highs are being maintained here. You can see market is maintaining all the lower highs. Market is not trading above any of them, but on the lower low, market was breaking past them. That has proved that the law is right. Please, I don't use trend line to trade. I'm going to use the trend line to show you guys something. So on the next video, we'll be talking about how to know when the retracement has ended. How to know when retracement has ended, so that we enter the right time with the market. That's what we call the Fibonacci retracement zone, the golden zone, and the Fibonacci retracement zone. So do well to like this video, share to your friends, and follow so that you get notified when I drop a new video. See you guys on the next video. Peace out.